Wipro is clearly having a field day. From being the top Nifty 50 gainer to its shares surging 13% intraday to hitting a new 52-week high, the Wipro stock has been buzzing ever since the IT major announced its Q3 earnings results. In fact, the Nifty 50 touching the record 22,000 mark was also primarily driven by IT firms. Top companies like Infosys, TCS and HCL Tech also saw their shares at a 52-week high, and the Nifty IT index climbed 4% to a nearly 2-year high. Now here's the thing, Wipro saw a 12% decline in net profit year on year. This was the fourth consecutive quarter where they've seen a fall in profits. Analysts expect Wipro to continue underperforming their peers. Their consolidated revenue was down too, yet their shares climbed. After the results, Wipro's ADRs or American Depository Receipts climbed over 17% to hit a near 20-month high. Let's try to understand exactly why. For one, analysts say that Wipro struggled to deliver on expectations over the last few quarters due to macro headwinds. Also, the third quarter is typically a weak one for IT companies since it's a holiday season in US and Europe. Another factor is that for Wipro, analysts expected a revenue decline due to the weakness in their BFSI vertical and the company's high exposure to consulting at a time where discretionary spending has gone down. So this was factored in. Most importantly, analysts highlighted Wipro as the standout among IT majors who have disclosed their earnings. They've seen positive indications in discretionary spending. They say the company's performance in Q3 suggests a turning point, with revenues experiencing degrowth that aligned with the upper end of the guided range. This could be a notable shift considering the previous 3 consecutive quarters of sequentially lower bands. But analysts do seem to be in wait and watch mode. According to Nuvama Institutional Equities, the Q3 performance and Q4 guidance leave much to be desired, though there are gradual signs of improvement. IDBI Capital says that Wipro is seeing early signs of a return to growth in consulting, and their order book of $3.8 billion will boost revenues. However, the brokerage expects Wipro's FY24 revenue growth rate to be among the lowest in the Tier 1 IT services peers. Morgan Stanley has assigned an underweight rating to Wipro. While they acknowledge initial indications of a shift, they say it's too early to confirm a definite trend. Jefferies also maintains an underperform rating on Wipro, saying that there was too much optimism getting priced in, especially after the huge surge indicated by the ADRs. Kotak Equity says that while there is hope of green shoots in the discretionary demand, pointing to double-digit growth in consulting, the decline in TCV and guidance of revenue decline don't reflect a quick recovery in demand. So I hope you found this video useful. For more such content, keep watching Mint.